Some companies are like those Russian nesting dolls.
Yeah.
You see the big one on the outside.
Yeah.
But the real value, maybe the most interesting stuff, is hidden inside the smaller ones.
Yeah.
And, well, I think Microsoft is a perfect example of that.
Absolutely. That's spot on. And that's exactly what we're aiming to do today, sort of unpack Microsoft, ticker MSFT.
Right.
We're going deep into its different business parts. To understand where that underlying value really sits, the mission really is to show you how financial pros look past the headlines, past the total market cap to find that, well, hidden value in a complex company.
Because for a giant like Microsoft, I mean, they do everything from, basic software we all use to cutting edge AI, cloud, gaming.
Yeah.
Just looking at the whole thing as one lump, it can definitely hide the true potential, maybe undervalue some parts.
Exactly. And that's where this technique, sum of the parts valuation, SOTP, comes in. It's super important here.
Okay.
It helps us see the value of each separate business and avoids that conglomerate discount problem you sometimes get.
Right, the idea that the market just kind of shrugs because it's too complicated to value properly.
Precisely. You might look at the total stock price and completely miss how incredibly valuable a specific fast-growing piece like Azure actually is on its own. SOTP lets us assign more appropriate, more nuanced values to each bit.
So by the end of this deep dive, the idea is you'll have a much clearer picture of Microsoft's valuation. We're hoping to pull out some maybe surprising facts, some key insights, and make these financial ideas, which can seem kind of dense, feel relevant to you. Ready to open these boxes?
Let's do it. So, sum of the parts, or SOTP, it sounds technical, but the idea is pretty simple, really.
Okay.
Think about a fancy meal. You wouldn't just put one price tag on the whole plate, right? You'd think about the cost and value of the steak, the fancy sauce, the rare vegetables.
Okay, I get that.
It's like that. It's a financial modeling approach where you value each business unit, each asset, separately. Then you just, add them all up.
And why is this so vital for Microsoft specifically?
Because their portfolio is just so incredibly diverse. You've got the mature cash cow software business. Then there's the super high growth cloud stuff. You've got LinkedIn social media, essentially.
Yeah.
Xbox for gaming, Windows operating systems.
It's a lot.
It is. And SOTP helps us cut through that complexity, find the value in each of those distinct areas, which, like you said, might get lost if you just look at the consolidated numbers.
So how does it actually work? What are the steps? Simplify.
Okay, so first step, identify the distinct business segments. Microsoft actually helps us here. They report in 3 main chunks.
Right.
Then you need the financials for each segment, revenue, operating income, things like that. Next, and this is where it gets a bit artful, you find comparable companies or comps.
Similar businesses to compare against.
Exactly. Businesses that look like each of Microsoft's segments, you look at their valuation ratios, like how the market values their revenue or profit.
Right.
You apply those relevant ratios to Microsoft's segment numbers, sum up those individual segment values, and finally, you adjust for things that aren't in the segments, like corporate cash or debt, to get to the final equity value.
Got it. So let's dive into Microsoft's actual segments. They report 3 main ones, right? What's the first?
First up is productivity and business processes. PBP, this is really the engine room for many businesses.
The Office stuff.
Yep, Office 365, Microsoft 365, the cloud versions, super important, but it also includes LinkedIn.
Ah, right, LinkedIn's in there.
Yeah, talent solutions, premium subscriptions, marketing, sales tools, and also Dynamics 365, they're cloud-based ERP and CRM systems for enterprises.
And the big story here has been that shift, hasn't it? Moving away from selling Office in a box to these recurring cloud subscriptions.
Absolutely, hugely successful. I mean, Office 365 commercial cloud revenue was up 12% in their Q3 for fiscal 25. Dynamics 365 grew even faster, up 16% in that same quarter. It just shows the power of that subscription model.
And AI must be huge here too, right? With Copilot and Office and everything.
Oh, definitely. AI integration, especially Copilot within the Microsoft 365 suite, isn't just like a new feature. It's seen as a major growth driver for the future.
How so?
Well, it adds real value, makes the tools more powerful, which encourages more businesses to adopt the cloud versions, maybe upgrade their subscriptions. It really cements PBP as a high-value, modern SaaS software as a service business.
Okay, that makes sense. Moving from that foundation, let's talk about what feels like Microsoft's main engine for the future, Intelligent Cloud, or IC. This is where Azure lives, right?
Exactly. This is the cutting edge. It's their whole suite of cloud solutions, public, private, hybrid. Azure is the dominant piece, absolutely, but it also includes server products like Windows Server and SQL Server.
And Azure's growth has just been phenomenal.
It really has. Just look at the numbers. 33% growth year over year in Q3 fiscal 25, and they guided for 39% in Q4. That's way faster than the overall IC segment. Azure is just critical, the absolute core value driver for the whole company right now.
And they're not shy about investing here, are they? I saw something about $80 billion planned for infrastructure spending in fiscal 25.
Yeah, it's massive. $80 billion in capital expenditures. They're even talking about potential AI capacity constraints after June this year.
Wow. What is that kind of spending signal? Just pure confidence.
It speaks volumes, doesn't it? These huge investments, yeah, they might pinch margins a little in the short term, but they are absolutely long-term strategic bets. They're betting big on leading the AI revolution.
Building the infrastructure for it.
Precisely. They're talking about adding over 2 gigawatts of new data center capacity, making every Azure region AI first.
Yeah.
And you see new things launching like Microsoft Fabric that had 55% year-over-year revenue growth, and the Azure AI Foundry. It all points to the steep commitment. And frankly, that kind of growth and strategic positioning justifies a premium valuation for this segment.
Okay, that makes sense. Then the third segment is more personal computing MPC. This feels more like the consumer side of Microsoft.
That's a good way to put it, yeah. This is where you find Windows selling licenses to PC makers, OEMs, and for devices. It's also Xbox, both the consoles and the content and services, the digital side.
And Surface devices.
Surface devices are in there, yep. And also their search and news advertising business, like Bing. It's kind of a mixed bag.
And the growth here is a bit different.
Yeah, more moderate compared to, say, Intelligent Cloud. Overall, MPC revenue was up about 6% year over year in Q3 FY25. But interestingly, the search and news advertising part did really well, up 21%.
So what are the potential drivers going forward for MPC?
Well, there's definitely talk about AI PCs potentially boosting Windows upgrades. That could be significant. And continued growth in Xbox, especially the services and content side, plus digital advertising. It's diverse, like I said, so when we value it, we need to remember it's got these different parts moving at different speeds.
Okay, so we've unpacked the segments. Now the big question, how do you actually put a number, a value on each one? You mentioned estimating financials first.
Right. So first, we needed projected numbers for fiscal year 25. We basically took the segment proportions from the recent Q3 results and applied them to the company's overall guidance for FY25.
Makes sense.
Based on that, we estimated Microsoft's total FY25 revenue would be around $281.7 billion, with operating income near $128.5 billion.
And breaking that down.
Okay, so PBP, the Office and LinkedIn segment, we estimated at roughly $120.4 billion revenue and about $69.9 billion operating income.
Got it.
Intelligent Cloud, the Azure powerhouse, estimated around $107.6 billion revenue and $44.6 billion operating income.
Okay.
And more personal computing, the consumer side, roughly $53.7 billion revenue and about $14.1 billion operating income. These are just estimates, of course, but they give us a base.
Right, a base to apply those valuation methods. You mentioned comparable company analysis or CCA, finding similar companies.
Exactly. So for PBP productivity and business processes, we looked at companies like, Salesforce, SAP, even Adobe is interesting because of their successful switch to subscriptions.
Yeah, how did you choose a multiple then?
Well, PBP has that strong cloud growth, the AI integration.
Yeah.
It deserves good multiples like other top SaaS companies. Now, Salesforce and SAP might trade a bit higher, maybe 8.1x to 8.6x revenue.
Right.
But PBP is also huge and mature, even with the cloud transition. So we went for the higher end of a slightly more maybe conservative range for established enterprise software. We landed on 7.0 to 9.0 times EV revenue.
EV being enterprise value.
Yes, enterprise value to revenue, and 25.0 to 35.0 times EV/EBITDA enterprise value to earnings before interest and taxes.
Okay. Then for Intelligent Cloud, AWS, Google Cloud.
Yep, those are the main comps. AWS, Google Cloud, maybe Oracle's cloud infrastructure, but here, Azure's growth, that 39% acceleration, and its central role in AI, it really demands premium multiples.
Higher than typical sauce.
Yeah, I think so. We selected a range of 10.0 to 15.0 times EV revenue, significantly higher, and 25.0 to 40.0 times EV/EBITDA. It reflects that unique position as arguably the leading AI cloud platform right now.
Makes sense. And finally, MPC, the more personal computing segment. Comps there are a bit trickier.
A little bit, yeah, because
Right.
it's so diverse. You look at gaming companies like Sony, maybe Nintendo's multiples are often sky high for specific reasons, so
Right.
maybe not the best direct comp. And for the search ad part, you look at Google, obviously.
So a more blended approach.
Exactly. You've got mature Windows, growing Xbox, growing advertising. So we used a more blended, maybe conservative range, 4.0 to 6.0 times EV revenue and 15.0 to 25.0 times EV bit. It acknowledges those different growth stories within the one segment.
It sounds like there's definitely an art to picking the right comparison and the right multiple.
Oh, absolutely. It's not just plugging in numbers. You have to look at the specific growth, the profitability, the market position of the segment, and the comps to make a judgment call.
Okay, so you valued each piece using these multiples. Let's get to the grand total. What did the math show for each segment's enterprise value using the midpoint of your ranges?
All right. So productivity and business processes came out at roughly $1,530.45 billion.
Wow, just that one segment.
I know. Then intelligent cloud, approximately 1,397.9 billion.
Almost as much.
Nearly. And more personal computing was estimated around $276.1 billion.
So adding those three parts up, what's the total estimated enterprise value?
Summing those gives us a total estimated enterprise value for Microsoft of, well, it's huge, $3,204.45 billion.
$3.2 trillion. But that's enterprise value, right? Not the stock value yet. We need those adjustments you mentioned.
That's exactly right. We're not quite there. We need to adjust for things on the corporate balance sheet. First, we add Microsoft's net cash. They have a strong positive net cash position.
How much is that?
It's about $43.344 billion. That comes from their cash on hand, which is around $94.5 billion, minus their total debt of about $51.2 billion.
Okay, so add the net cash. Anything else?
Yes, there's one subtraction. They have an accrued transition tax liability left over from some tax changes a few years ago. We need to subtract that. It's about $7.6 billion.
Got it. So take the $3.2 trillion enterprise value, add the $43 billion net cash, subtract the $7.6 billion tax liability.
Yeah.
But what's the final equity value estimate?
After those adjustments, we land on an estimated total equity value for Microsoft of $3,240.194 billion.
3.24 trillion. And per share, how many shares are there?
Divide that total equity value by the number of shares outstanding, which is about 7.465 billion shares, and that gives us an estimated equity value per share of approximately $434.05.
$434 per share. Wow.
And what's really striking when you do this SOTP, I think, is how much of that total value comes from intelligent cloud, particularly Azure.
Yeah, nearly $1.4 trillion of the $3.2 trillion enterprise value.
Exactly. For a business that's, relatively newer compared to Office or Windows, it commands this enormous share of the total value. It really highlights how pivotal Azure and AI are to Microsoft's entire valuation story now.
Okay, that's a fascinating breakdown. But you mentioned judgment calls, estimates. This final number, $434 a share, it relies on assumptions, right? How solid is it? How sensitive is it to changes?
That's a crucial point, and this is where it gets really interesting, actually. The valuation is incredibly sensitive to the inputs. Well, think about those multiples we chose. If you change the EV revenue multiple for just one segment by only 1.0x, just 1 point,
Yeah.
the impact on that segment's calculated value is massive. For PBP, a 1.0x change in the revenue multiple shifts its value by over $120 billion.
Just from changing the multiple from, say, 8x to 9x.
Exactly. For intelligent cloud, a 1.0x change is worth about $107.6 billion. For MPC, it's around $54 billion.
Wow. So getting those multiples right, or even just slightly off, can swing the total valuation by hundreds of billions of dollars.
Precisely. It really underscores why selecting the appropriate comps and multiples is so critical, and why there's always a range of potential values. It's definitely art as much as science. These models depend heavily on those key assumptions: the financial forecasts, the chosen multiples, the net cash figure.
It highlights the judgment involved.
Right.
Okay, so looking forward then, what are the big risks and opportunities for Microsoft that might affect this valuation?
Well, on the risk side, competition is obviously fierce. Everywhere.
In cloud, in software, in gaming.
Absolutely, and their deep focus now on cloud and AI, while a huge opportunity, also carries operational risks. What if something goes wrong? What if those huge investments don't pay off quite as expected?
Regulatory scrutiny too, I imagine.
Oh, definitely. Increasing regulatory pressure, especially around antitrust concerns, AI ethics.
Uh-huh.
That's a big one. And The usual geopolitical risks that can impact any global giant.
But then the opportunities seem equally massive.
They really do. The potential to monetize AI across everything they do, Copilot, Azure AI services, maybe new things we haven't even seen yet, that's immense.
Right.
Continued cloud growth as more companies migrate, the potential to use their data and AI smarts to push into totally new markets, and just that underlying surging demand for AI infrastructure.
Right.
Remember the capacity constraints.
Oh.
That signals huge future revenue growth waiting to happen once they build out that capacity. The demand seems incredibly strong.
So we've really opened up those nested boxes today, haven't we? Using this sum of the parts approach has shown, I think, the distinct value drivers within Microsoft. It's not just one big tech company.
Not at all. It's a collection of really powerful, distinct businesses, increasingly driven by leadership in cloud and especially AI.
And maybe the provocative thought to leave you, the listener, with is this. Think about how a company's big strategic bets today, those massive investments in AI, for instance, even if they hit profits short term, how they can fundamentally reshape the company's entire value, its entire story, for years, maybe decades to come, especially in fast-moving areas like AI.
It's a powerful dynamic to watch.
Absolutely. So maybe think about other complex companies you follow. Could looking at them through this sum of the parts lens reveal some hidden value you hadn't seen before? Definitely something to consider. Thanks for joining us on this deep dive.